Hello everyone, I'm Dan Bossie, President of Ag Resource Company here in Chicago. I'm joined by our Director of Research, Dr. Bill Tierney, and we're here to talk just a few minutes about the changes that's going on in China's potential grain policy. Now, 2 years ago, the Chinese decided to allow cotton and, of course,
soybeans
to float freely. By that we mean that the market was established by the world market as opposed to a minimum price structure that the Chinese have had for so many years. I think at this point it's 6 or 7 years. China each year has been raising their loan price almost 10%. And what has happened during this 6 or 7 year time frame is that the Chinese corn price and wheat price and to a lesser degree other grain prices have gotten well below the world market. And now China has overproduced its grain. They're sitting on large caches of supply, and as such, the cost of feeding the rats and storing this grain has gotten to be prohibitive, and they are looking at changes. Now, we understand we are in early days in this discussion, but it will have big ramifications for the market. China has fed more soy meal because of the very high domestic price of corn, estimated around $9.70 a bushel. We would place that additional meal feeding somewhere between 10 and 15%. Also, the rumors have it that China's sitting on as much as 150 million metric tons of reserve corn, which potentially is trying to be auctioned off, but at least today is having difficulty because of off quality and because of the very high price and the ability to bring in other grains so much cheaper, Bill. So if we think about this, China has become a sizable world grain importer, not so much of corn, but of other grains, just because of this policy.
I think this past year and what's projected for next year, China will be importing a record about 20 million metric tons of feeds. It used to be when they imported feed, it was corn. But starting about 3 years ago, particularly with the phytosanitary restrictions placed on U.S. corn, importers started switching to grain sorghum, feed barley, DDGs, which they've been buying for about 4 or 5 years now, and also even some cassava, as well as a little bit of corn. And if you combine all of those feeds together, it's a record quantity last year, record quantity this year, and it's projected to be almost the same level this coming year. And that has just exacerbated the problem of these large stocks, because the government recognizes that they're storing corn at the same time that they're importing feed substitutes. And the question is, how fast are they going to change their policies, and what impact would that have on international trade? Some of the people I talked to in the trade says that under the WTO, which they joined in 2003, China is highly unlikely to subsidize the export of corn. They might, however, subsidize the export of corn products, processed products like starch and ethanol and other products, but that would likely be challenged under the WTO as well. The second thing that China could do is change their internal subsidies to try to encourage more domestic consumption.
And they're trying to do that with rail subsidies, I understand it right now, the ability to cheapen those rail rates from the north to the south.
Well, they're also doing it with a variety of subsidies that they're providing to domestic corn processors. Now, a lot of people don't realize it, but corn processing in China has been the fastest growing component of demand up until about 2 or 3 years ago, when these very, very high corn prices in China relative to international prices really hit the industry's profitability hard, so that we haven't had much of growth. China has large excess capacity in corn processing, much like they have large excess capacity in soybean crushing, and for that matter, excess capacity in almost every other major production process.
So we've got this ingredient now, or let's say thought process within China, that the leadership wants to make changes to their government programs. How quickly do you think this would happen? I mean, that's the big question. We already hear talk in the markets that maybe the farmer's going to get 10% for his grain as soon as this fall, with changes to more of that target price system for next year. Do you agree with that, or what's your thought process?
I think a 10% reduction in the reserve purchase price is certainly within the realm of the kinds of flexibility that Chinese government has shown when they've tinkered with agricultural policy. Some people are proposing that it's going to be a much larger cut. I don't think that's going to happen. Based on some of the people I talk to that know a lot more about China than I do, they suggest that with a major crop like corn, which produces or has more area and more production than soybeans, wheat, cotton, oil seeds, that with a major crop like that, they're probably going to let the farmer know at least a year or two in advance that these changes are coming. The other thing they haven't worked out is how are they going to keep rural incomes high? How are they going to keep corn producers' income high if they lower this income support mechanism by propping up prices? If they cut the price, are they going to replace it with a deficiency payment, much like we have or used to have here in the United States? So that hasn't even been mentioned, and I think working that out will take at least a couple of years.
I would say at least, because I would imagine some of these Chinese farmers may not even have a bank account that the government can deposit funds in or cash a check per se.
Well, that hasn't stopped them from, at least with cotton and with soybeans, supposedly making payments, but I haven't seen any reports on exactly how those payments are made. I don't know if they're made in cash or if they're made direct deposits to bank accounts. I take your point that not lacking banking facilities, a lot of these farmers, it's going to be very difficult to get the cash in their hands.
It's a big deal to the markets, everyone, because if China does start to shed its grain supply, not through exports, by different mechanisms of domestic consumption and subsidy to the farmer, we would lose that 20 million metric tons of demand, first of all, but then we'd start to see soy crush rates start to level off, or China would have to become a more important exporter of soybean meal. So these have ripples up and down the agricultural landscape. I would imagine if we look at China maybe liquidating its 150,000 metric tons of corn, that's a process that takes, I don't know, 2 to 3 to 5 years. Do you have
I would say at least 3 to 5 years, given that we're not likely to see large reductions in production anywhere near as much as people think, because what other crops are they going to grow? There is one positive benefit to this. If you lower the basic food grain, feed grain that goes in the livestock rations, you're going to stimulate increased livestock production. You're going to lower production costs. There's a clear effect that if you lower meat costs, people are going to eat more meat. So we may see, let's say, anywhere from 8 to 18 months down the road, a surge in livestock production after domestic corn prices are lowered, and that in turn helps increase soy meal consumption and ultimately starts to build demand to consume this extra corn. But here again, to get rid of those excess stocks probably would take anywhere from 3 to 5 years.
There definitely is a gold or silver lining to this whole thing, Bill.
I think any time that you try to align your market with the overall global supply and demand, you're better off than trying to fight that global supply and demand. And since China is a signatory to the WTO, since China clearly has a policy in place to try to move their economy to a more market-oriented economy, this is just one of literally hundreds of policy changes that they're going to have to make, and frankly have been making for the last 25 years. This is nothing new in terms of the challenges that the Chinese authorities have faced over the last 25 years.
Really nothing new that the American farmer didn't go through when we had the same kind of excess stock in a target program going back in the 80s.
Absolutely true.
So the cycle of agriculture is still alive and well.
I agree.
Dan Bossie, joined by Bill Tierney, wishing all a good day.